And so, Pat, I think I'll start with you here for the first question. What are some of the payment trends that you're keeping an eye on that you think will have a right now impact within the market, and why?
Yeah, it's fun that, kind of future to your point is now. I think we see a lot going on today around just real-time kind of instant payments in general. You've seen countries like the UK, Mexico, Brazil, Thailand, Singapore, Australia. They've, been doing faster payments for quite some time. And now you've got the States catching up with RTP, which has been in for a while, but now with FedNow, we'll have kind of the tail. And I think what's important is, especially as you look at payments, where end consumers or businesses are really digital native now as they kind of look to the future. We've got rails that are kind of fit for purpose. So I think it's an important one. And it's good to kind of see, especially the States playing some catch up now. So that's exciting. I think another one, again, kind of led by our friends in Europe, is open banking, where you've got opportunities to really enable data to be used in a much more kind of intuitive, smarter way. I think it's kind of fun to see how open banking plus APIs, plus embedded payments, plus user experience comes up with some clever things that fintechs are doing, and watching fintechs partner with banks. So, excited to see that and, continue the rollout there. And, I think one of the kind of interesting things, especially in a rising interest rate environment, we got buy now, pay later. And while it's been around for a while, as credit becomes more expensive and, those things kind of hit closer to home, again, you kind of see some of the folks that are doing some good things in open banking also, looking into and trying to understand how they can help their customers and their customers' customers.
And
what we're tracking, and probably is as exciting as anything, is, tokenization of real world assets. If you apply, the technology to some of these industries that have been around forever, that are fraught with manual processes and illiquidity and latency, there are some real opportunities to leverage the technology. And I think what's kind of fun to watch is, if you think about the real estate or debt capital markets or commodities or even trade finance, I mean, these are spaces where institutions are leaning in because there's so much cost to be taken out of the equation. So immediate opportunity for P&L improvement, but there's also kind of a blockade on the growth of the market. So there's revenue gain, and the technology certainly allows for that. Especially when you look at the programmability and you can get smart. Lena mentioned AI and machine learning. Like, you start to get pretty clever as these use cases unfold. I think the other, that we see and probably almost in parallel, that we're keeping an eye on is CBDCs, central bank digital currency. You've got about 90% of, kind of the central banks across the globe that are looking at the opportunities to, again, leverage the technology. And I think, it's increasing in terms of the number that are doing, increasing in terms of the pilots. So we're watching that. What'll be interesting is you watch that, and it's going to take all the commercial banks beneath those central banks to actually make it work. So it should be fun to see those opportunities unfold. Ripple has been focused on one that, again, is in the here and now, really for the last 7 years, and that is cross-border payments. If you look at some of the same inefficiencies I mentioned with tokenization, it's same ones have been there. Speed, transparency, cost. And really, speed also equals certainty of payment too. I love Lena's example around payroll. If you've got employees you're trying to pay in a different country, and you can't ensure with certainty that those funds are going to get there and the amount that you need is going to get there on the day that it's going to get there, it's a bad day for your employees. Same holds true for suppliers. So we see that in the here and now. our on-demand liquidity product has been kind of leveraging XRP to do that for quite some time. We've been able to eliminate trapped cash that exists and really get from fiat to fiat in a much more intelligent way. So I think that's certainly there. I think the other is, we see the advent of stable coins and usage that's coming through stable coins. And so the ability to provide users access in and out of crypto, in and out of kind of digital use cases where they may have not had access before. I mean, you've seen a market that's grown from virtually nothing in 2007 to, 180 billion at its peak, and still, at about 130 billion-ish in market cap. These are real use cases, and I think it's only increasing as kind of trust and transparency around those coins continue. And so remittances is, it's all about making sure those that need financial inclusion the most at a reasonable cost can leverage the financial services and the infrastructure. What we're seeing is there's opportunities, especially with that kind of segment, but also you start to look at underserved small, medium-sized enterprises across the globe that have similar, problems of getting equitable cost transparency. If they're not big and maybe can't necessarily get banked by the big global players, they have some of the same problems. So, certainly we start to see that. But I think just natively, you've got even consumers that they have crypto, they want to use crypto, and as they want to get that in and out of fiat, it really provides almost where I talked about XRP providing bridge cross currency fiat. This provides some of that bridge, just as it relates to native payments. So I think this is a question I love. I've been at Ripple now 5.5 years, and I think the entire time I've been here, I've watched our leadership do a just fantastic job in educating regulators, educating the community, and more is needed. There's certainly bad actors that have given blockchain, digital assets, crypto a bad name, but that's few and far between. And so I think that education is important. Really, it's about clarity and understanding how to leverage the technology and not circumventing what's been created over 100 years, but actually working within that framework. So I think cross-border through crypto or stable coins is a great example of that, because if you have the trust, you have the transparency, you understand what regulations you're working within, and you have that usability, you've got a lot of demand for that very thing. What happens is without kind of that without that kind of clarity, you've got folks that then get uncomfortable.
And Lena, from your perspective, what are some of the bottlenecks to overcome, existing initiatives to kind of create, and there are a few, and they're exciting, to create a global payments infrastructure? Kind of what, in your view, is the benefit of efforts like ISO standards or FedNow? What is the type of feedback that the market is giving?
I think it's been kind of resoundingly positive. ISO 20022, which really allows for not only domestically, but if you think about cross-border payments, it's the opportunity to have standards. And I think if you think of Web 1 and 2, it's intuitive now. You just send an email. You've got your name, your domain, who you're sending it to, subject line, body. Now we can even do attachments. Like we're working on that in payments, blockchain, digital assets, and one of these days we'll go, it's so intuitive, but we're in the process of doing that now. But I think it takes folks like the ISO standards body, which Ripple has been a huge proponent of and been involved with for a while. What's nice about building a brand new payment network, which RippleNet is you can actually have those standards inherent in the technology itself, and then you can do some really smart things around risk compliance and ensure that you hit the ball out of the park there. I think you talk about FedNow, then if you then take those standards and you have a brand new rail in the country, you can apply it in smart ways. I think Lena hit on a few of those at the beginning, but it really opens up the aperture for how not only banks but fintechs and other providers can do really clever things, really with the end user in mind. Well, I think you've not only got central banks and then, as I mentioned, the commercial banks underneath, but you've got all institutional players really leaning in. If you kind of look across the largest tech providers, Apple, Google, Amazon, they are, certainly leaning in. You look at what's occurring with Visa, MasterCard, PayPal networks, players, they are leaning in. You look at some of the largest financial institutions that are even today looking at trying to do the ETFs, Goldman and Fidelity. Like, these are players that really understand that, if they're going to build for the next generation, which, we have the opportunity to do, and it doesn't happen often, that you can not only eliminate the manual kind of a liquid nature and kind of slow settlement that occurs, but, you can also build it in a way that gets the end user in mind. Yeah, look, I think we've covered a lot of them. So, what I'd say is, like, innovation is relentless, and innovation and competition will find a way, to bring the technology, which, by the way, the technology is here. And I think it's really applying the technology against use cases in a compliant and, clear way. There's opportunities to have better user experiences. I think it's coming, but it's really less about the technology and really more about how we understand how to leverage it to get back to doing great things. I will say, if you look at some of the opportunities ahead, it's privacy versus illicit activity, or it might be speed versus fraud. And I think historically, when you put those, kind of things up against each other, it's one or the other, and it's not mutually exclusive anymore. And I think the technology really enables the opportunity to, do both. They can coexist, in those formats. So it's exciting times, and, excited to be part of it.